Hello everyone, welcome back to the channel. Today I'm going to talk about three stocks that I think are great stocks, but they're currently overvalued. I'm just going to run through the three different stocks, and I tell you what price I'd sell, what price I would buy them again, what I'm doing with those stocks right now, as I own shares in a couple of them. So yeah, let's get cracking. Let's get straight into it. Let's start with the first stock, and if we're gonna go through three stocks, and it'll be a bonus stock at the end. So just watch all the way through to get the bonus stock. Okay, our first stock is Apple. Now, Apple is the biggest stock in the stock market. It has a market cap of $1.3 trillion. Actually, more, almost $1.4 trillion at the moment. So let's have a look at it on Yahoo Finance. Here we are. So this is a five-year stock price of Apple. So I started buying the stock. This was a nice dip here. I bought this stock during this dip, and this dip was due to the bad earnings, particularly in regards to iPhone sales. So I think it was the iPhone 10 wasn't selling very well. People weren't really too interested in paying $1,000 for a phone that wasn't that much better than the last version. So I bought a few here, and that was a good time to buy. Obviously, I've made like over 80%, I think 85% on those on those uh, on those shares that I bought. Right now, you can see the stock price has soared so much since then, and let's talk about why that is. Basically, at the moment, because Apple stock is the biggest stock in the stock market, it's in every single uh, index fund or ETF. Um, so a lot of the money that's tied up in Apple stock isn't there because people think, oh, Apple's a great stock, I'm going to buy Apple stock. It's because people buy an index fund, and the index fund is mostly Apple stock, because like the entire stock market, I think, is worth roughly 17 or 18 trillion dollars in total, the US stock market. So Apple being 1.3 trillion, that's almost 10%, 10-15% of the entire stock market is just Apple stock. So obviously a huge company, but it's here. I've just included a little graph of its average price to earnings ratio. So you can see in 2008, it was really, really high. It was a bad time to buy. Obviously, it crashed down to about 11 during the recession. Then it went back up to 20, and it's been below 20 for years and years and years. And these were all okay times to buy. And now it's surged right up almost to 20. It's 26 at the moment, over 26. So historically, that hasn't been a great time to buy. So yeah, Apple is a phenomenal stock, but at the moment it's just a little bit too pricey. So what I'm doing with my stock, am I selling it? No, I'm not selling it. I'm going to hold it. I think it's a hold forever stock, meaning that I still think Apple will be around in 20, 30 years. I'm going to retire with that stock, probably in my portfolio. You get the nice little dividend. When I bought the stock, the dividend was about 2%, and now it's less than 1%. So the dividend, if you're buying now, is not a great yield. So if I were interested in this stock, I'd wait for a little bit of a dip, about a 20% correction to buy the stock, and that can happen. We've seen that before, as I showed you before. The stock has dipped here. This is the price to earnings, but I showed you on the graph here. The stock does go through times where it does dip. So just wait for a 20% or so correction. You'll get a nicer yield, give you that safety net as well. But yeah, if there is a correction, I would label this stock a buy again, because it has these growth factors. 5G phones are coming out in 2020, so I think that's why the stock has gone up so much recently. And the release of Apple TV which could be good or it could be a total flop. We'll have to find out. Personally, I don't know how good Apple TV will do. Usually, the market leader, which is Netflix at the moment, continues to be the market leader. Competition can come, but I think I don't think it will catch up with Netflix. So yeah, that's all I have to say about Apple stock. So let's move on to the next one. This is a stock I've already talked about. So this is Shopify. In my last video, I said I would still kind of be interested in buying Shopify, but on further reflection, I think it'd be a little bit risky to buy it right now. So Shopify, if you haven't heard of it, it's basically like a website builder except for shops. So it's coming after Amazon. So Amazon have all their own things and people can sell their products on Amazon through the Amazon website, or you can create your own website and sell things directly through your own website. And Shopify make that very easy. So obviously, there's a lot of room for growth in um, online retail, uh, and Shopify has a huge potential to grow. Um, but at the moment, let's have a look at its stock price. At the moment, I think it's increased a little bit too much. It's at a market cap of 50 billion. I bought it. Oh, sorry, let's not do that. I bought it around here at this price, and it doubled. So I was like, okay, I'll take some profits. And usually I kind of regret that decision, obviously, because it had another 100% gain. So don't always just sell just because a stock price has gone up. Doesn't mean you should necessarily sell it because it could continue going up if the growth factors are still there. Should only sell a stock, as I learned here, even if you're like, oh wow, I made such a quick profit. Only sell it if you believe that the growth potential is no longer there. And the only reason I sold the Shopify stock after it increased from about, I literally bought it at the bottom. I was so lucky. Bought it from here and it just doubled in a few months. I just sold it because this can't continue, and obviously it did continue. But right now I think Shopify is quite overvalued. There's a price to sales ratio of 25, which is huge. That's most companies have a price to sales ratio like between 0.5 and 3, let's say. Anything over 5 is usually very expensive. So 25 times sales ratio is enormous. And there's some risk to buying Shopify as well. Shopify is mostly dominated. There are big businesses that use Shopify, like I talked about in my last video. I'll link that video in the description if you want to have a look at Shopify stock, a more in-depth version. But um, there are some big businesses that use Shopify, like Tesla, Gymshark, and I ran through a few more in that video. But mostly it's just single people like myself who want to get going on online marketing and online selling who use Shopify. So it's just small businesses mostly, and they're the ones who are most affected in a recession. So it's just a little risk there. So there's just a huge amount of risk buying this stock at the moment at these prices. So I'd be looking at like even a 40% dip to buy Shopify, and it's more volatile than Apple because it's a smaller market cap. It has more room to drop or room to grow at the same time. But personally, I think it's too risky to buy right now. But I'm gonna label it a hold as well. I think it has still a huge room to grow, so it's still a hold in my opinion. Okay, and, I think that's all I wanted to talk about Shopify. Um, yeah, it's still losing money, so of course it's a risky stock. Any stock that's losing money, which all the rest of these last ones, apart from Apple, they're all losing money. That's always a risky stock to purchase. Okay, let's move on. Snapchat. Now, Snapchat. Let's have a look at the chart. I was. This is the max. So since its IPO, it's just been down, 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 and eventually dropped. I was really looking at buying some. Oh, I clicked that again. Excuse me. I was really interested in buying some Snapchat stock when it dropped this low because I saw the amount of young people who are getting back into using Snapchat. It's really popular with people under 20. And Snapchat started doing some really good things, started bringing in some really cool new features that were making the platform much more popular again. And I noticed this and I didn't capitalize. I didn't buy any, so I regret it now. But since then, it's tripled. So yeah, it dropped, it dropped, it dropped, and the reason it dropped was because Facebook just copied all Snapchat's best features, which is I don't even know how that's legal, but they just copied everything that was good from Snapchat and just put it into Instagram. And obviously, Instagram's a total beast now. Um, but yeah, Snapchat did some really great things. It completely turned around, added all those news, those little interactive games. Um, so that's why it's really popular with young people. So they did some great things, and they definitely deserve this turnaround of a 3x. So at the moment, I think it's uh, way overvalued, but I think if the stock price goes under 10 again, which would be like almost a 50% correction, I would definitely be interested in buying some. Its price of sales is 21, which is obviously huge as well. It's not really earning money, but um, Facebook and Google are lapping up all the digital marketing money at the moment. But I think people are going to realize that Snapchat has a huge amount of potential, especially considering all all the young people are on it. They're not really spending much money online yet. They don't have much money, but once they graduate from university or from school and start earning money, they're going to be using Snapchat and seeing ads and buying things through the Snapchat platform. So advertising will get more and more involved and coming onto the Snapchat platform. So I think Snapchat has huge potential, but it's just way overvalued right now. It's way too risky to buy. So it's only I'd I'd probably hold it as well. So all these stocks right now, I'd give a hold because because of their huge growth potential. Um, all right, let's go to our final bonus stock, and this is a very trending stock at the moment. This is Beyond Meat, and right here is the graph of their price to sales ratio in the last year. As you can see, it was huge, 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 huge during this was during their peak, um, and then it dropped a huge amount. So they IPO'd at a very small number, this very small amount, and climbed to crazy amounts. And this would have been a nice time to buy. I think everyone knows that the trend of veganism and vegetarianism is increasing hugely, and Beyond Meat have some huge partners such as Burger King. I think people have seen that Beyond Burger. I've even tried it. It's pretty nice. It's pretty good considering there's no real meat in it. Um, but yeah, it also has a price to sales ratio of 26 or so. Yeah, it's price to sales is about 25, but historically would have been a good time when I was about 16. Just still a huge price to sales ratio. So it's even risky here. So at this price, I think it's too expensive. Um, Although it's growing at a crazy amount, like 30% revenue a year or even more. So yeah, it does have a lot of potential, but it's a very volatile stock. So I think if you want to buy some of it, if you want to buy some Beyond Meat, you can definitely get it on a dip. Probably below $80 is a good buy. Um, so yeah, that's everything I wanted to say. All all these stocks I'd label as a hold because they all have such huge growth potential, but just because the market at the moment is crazy. Market is so so high right now. It's just gone up in a straight line recently. You can see this little last burst in the last few months. There's not a lot of good stocks to buy at the moment, so I'm just buying, but I'm just being a bit more cautious with it. I wouldn't buy any of these overvalued stocks. Just PEs are just too high. You need to wait till they come. If you see a stock with a PE under 20, if it's in the tech industry and it has growth potential, maybe that's a buy, but just be careful. Um, that's all I wanted to say for this video. If there's anything you want me to talk about in the future, please leave a comment below. And if you enjoyed the video, please give it a like. I'm just starting out, and I would really appreciate it. Thank you so much for watching, and I'll see you in the next one.